Back with another edition of the Wednesday live show, and hopefully the live show player is working. YouTube has done a few little changes to what was the live show player, and so now this morning I think I figured it out, but I'm not 100% positive. I believe I'm going to check it in my other browser while I'm talking here just to see. But anyway, as usual, most of the viewers watch the show after the fact, and so basically, I've always posted the live show video after I get done with the show. I put the recording up so you can watch it at your convenience. No big deal. Those of you that like to actually watch it live, feel free to join me every Wednesday at 10 o'clock. So, real quick, let me just check something here. I'm trying to on my other computer. I want to check to see how the embed is doing. So here we go, and then I will know for future reference. Interesting. Yeah, last week I was not able to record the live show. Oh, it looks like it's working. Okay, cool. Very cool. Huh. So, just a quick note here. So what you'll want to do to watch the live show each Wednesday morning is you will want to pop in like right at about just before the show starts, because what I do is I remove the embed. I remove the previous show from the previous week's embed off of the live show page, and then I embed the actual live show player. That's the way I've been doing it. So we'll just have to play it by ear. So once I get the hang of doing it, kind of like I figured out this morning, then everything should be good. So anyway, we'll jump right into it here. It's going to be a quick show this morning because there's not a whole lot to talk about. Quite frankly, the market itself is, well, I mean, it's sort of dull. Look at yesterday's range, today's range. I kind of expect things to be a little bit dull, but hey, you never know. We had a little bit of action over the past week or so. A little bit of a dip there, and then a rally. And quite frankly, if you look at this trend line, it's amazing. It's amazing that the persistence of this uptrend without, more than, a few percent pullbacks along the way. I mean, this year, right? I don't remember exactly what the distance from the intraday high to low was back over here in February or July, but I mean not more than just a few percent on the S&P anyway. So there's 2021. So the but hey, we're approaching autumn and things tend to get a little more exciting. So we have like, one more, actually two more weeks of the dog days of summer, and then it's Labor Day, and then typically after Labor Day things start to get more exciting. So it'll be interesting to see how this plays out. I've been saying for a while now, as long as this trend line, as long as the market manages to hold this trend line, then you can't really get too concerned about anything. Oh, let me fix something here. There we go. There we go. Something was a little off with the time scale at the bottom. Anyway, there you can see 2021. So there's the two dips that I'm talking about. Very few dips. So interestingly enough, this particular chart, I decided to make it off of was it area chart? No, not an area chart. A line chart. There we go. So my SPY chart connects these lows from right after the low back in March, connects these lows and these lows, and I kind of like the way that chart looks, as far as the line chart. So when I change it to open, high, low, close, then it looks a little weird because it's intersecting a few of the bars. But interestingly enough, it also, by doing it that way on open, high, low, close, chart, it puts the trend line like sort of right below the more recent lows. So that's why my trend line is where it is. So S&P, so far so good, right up at the highs. New all-time highs the past few days here. And when I look at like say an intraday chart here, you can see what I mean. All the recently here, a few days ago. See, today's the 25th, so a couple days ago, we had the I guess Monday morning gap up, and then it's just been trading in this really tight range here. So nothing really too exciting, just sort of intraday. Yesterday, just chopping up and down in a relatively small range. So, and even if you go to the daily chart here, you can see that the ranges, we had a few long range days recently, and then now it seems like we're back to these narrow range. I think that Powell is speaking today or something, right? Today is, if I'm not mistaken. I I didn't really catch the news that much this morning, so I'm not positive about that. But I think Powell might be speaking today, and so, or if not, very soon. So anyway, moving on, the Qs. The Qs are up at the highs as well. They had just a little bit of a dip here, and then just gapped lower and just ripped right straight to new highs. So that's kind of interesting. I did have a trend line on the Qs too, but you can see very persistent. And interestingly enough, the Q spent like a month sort of just grinding sideways in NASDAQ 100. And so, broke out of the range there and up at the highs. So nothing to complain about there. Russell 2000 trapped in a big, gigantic range for most of the year. Tested the lower end of the range and has rallied back up towards the midpoint of the range. So a lot of individual stocks obviously are not keeping up with the major indexes, or I should say the S&P, the Dow, and the NASDAQ. I don't know that the Russell is considered a major index. Dow really close to new highs, but not quite there on this latest little pullback and rally. So there's a couple Dow stocks holding things down, but no big deal. So anyways, the big news today is that we have only 2 open trades. Oh, by the way, the XOP got I don't have my lines on the chart, although I have figured that out too. So it's been a little bit of a learning experience past couple weeks with the YouTube changes and this and that, but going forward, I've managed to figure out what's going on with my charts as far as not saving my markings on here, right? So like this, even though I saved this chart, it didn't save my markups. But anyway, long story short, we got long the XOP, and then this little dip here, fairly significant dip. We got knocked out, like sort of at I believe it was right around here, and then sold off a little bit more. And now it's kind of rebounded back to, the area we got stopped out. So those kind of things happen, but and it's kind of weird too because it didn't really get a lot of forward progress higher to trigger it in like we would normally see, but for some reason it triggered in, and on one of these closes, it was probably like right back here. So the nature of that sort of drop and that big gap down. So, and then this 1-day rally, I believe. So we got long like in this area. Anyway, long story short, it has managed to rebound back up, but we took a stop out on that. And quite honestly, it doesn't look too bad here. It looks like a pretty similar setup, but it's about to run into a huge amount of resistance here. So we'll have to see what happens with that. So anyway, there's basically 2 open trades, Kroger and Pfizer, right? Let's look at let's look at Pfizer first, because as you see, the trailing stop on Pfizer has moved up to 47 and a quarter, right? And which is getting taken out today. All right, so watch this. Haha, I figured it out. So I have like a little watch list over here on the side off the screen, and that's where the charts with the markings get saved. So if I just type a ticker symbol in here, it goes to just a generic, just a regular chart without my saved markings. So I have to actually pull it up from a watch list. So just a little sort of, anyway, the trailing stop was 47, and then I don't really want to mark it on. Well, I guess I should. You can see it triggered way back here in early June, and then it just kind of, spent a lot of time just sort of going sideways and doing its thing, and then all of a sudden it started taking off, and I mocked up like some of the trailing stops along the way. But anyway, long story short, I'll just grab one of these. I'll see if I can grab this. Oh, no. Well, I'll go ahead and mark it right here. The trailing stop had moved up to 47 and a quarter, which was right in that area. Whoop, right in that area, and that's where it's hitting the stop today. It'll be interesting to see. It'll be interesting to see like if it rebounds and just rallies back up. But the idea of the system is when a stock sort of goes parabolic like this, right? The stop trails up, gets tighter and tighter, and theoretically it still allows enough distance for a normal pullback, but stocks tend to get more volatile, right? Pfizer's definitely gotten more volatile as the prices increased, and so you can see that we want to keep that trailing stop sort of tight because we don't want to give a whole lot back, right? So, I mean, there's no telling. A lot of times when stocks go parabolic like this and they have, huge moves up, once they sort of turn the corner and crest, right? Like I could draw a trend line across these two highs. A lot of times, they go into a long decline and give back a significant portion of it. And so the real magic sort of comes in with being able to protect the majority of the gain. Now, of course, there was a parabolic stop that it kicked in that if you really wanted to protect the majority of the gain, let's see, that parabolic stop on Pfizer was you can't really see it here, but it was 48.70. So it would have been let's see, 48.70 would have been probably right below this low right here. So that would have actually been the, if you didn't want to give much of it back, right, then that would have been the place just a little bit higher than the 47 and a quarter. So anyway, Pfizer's getting closed today after having been open since all the way back here. Whoop, annoying. Since all the way back here, he's driving me crazy. So now I've added a couple of lines there. I didn't mean to, but anyway, there it is, 38.90 to 47 and a quarter. So Pfizer's going to hit the closed list today, which will only leave one open stock, which is Kroger's, right? Which is, whoop, I did the same thing there. So let me pull up. There we go. See, I got it figured out now. I can't believe this much time has gone by, but I was used to some other charting platforms, and they all have their little idiosyncrasies, and it just so happens that it took me longer than normal to actually figure this one out. But there you go. I had Pfizer marked up like this too. So you can see all of the, oh, that's interesting, huh? These charts sort of have a little bit of a different look to them as far as the time scale. Yeah, that's something else that I need to work on a little bit now that I've figured out the thing about saving my marks here is I need to figure out how to make everything consistent. So, but anyway, so the stop on Kroger is, and I haven't marked the new stop on here. Let's see, trailing stop. The trailing stop on Kroger right now is 44.25. Oh, okay, so it is marked on here. Yeah. So, I mean, this is basically the same thing as Pfizer, right? I should say it's similar. You know, the stock kind of it triggered in back over here and done its thing, and it's really taken off and kind of gone not really parabolic, but yeah, you could almost say so with these long range bars. But anyway, it's kind of hanging around right up here, and so the is trailing stop is inside of this last long range day here. And so it's tightening up pretty quick here. And the same sort of thing. We don't want to give a whole lot back, right? You'll notice, well, you can't actually see it on this screen because it's over to the right, but unless I move it over there, but the parabolic stop, as you can see right now, is 45.12. So let me move this back where it was. Now I got to center my chart again. So 45.12 is where the parabolic stop is, which I believe is right, yeah, so it'd be right under the low of that bar. The low of that bar, 45.13. So it's one tick below the low of that bar right there. And so if you really wanted to keep a tight stop, lock in the profit and not give a whole lot back, you'd use the parabolic stop. Or if you wanted to put a super tight stop on just a portion of it. So the normal trailing stop is designed to sort of hang back just far enough to keep us in. Although, like I mentioned before, when a stock does sort of go, make a parabolic move like this, the trailing stop is going to tighten up, and it's going to tighten up more aggressively, I guess is the term I'm looking for. So Kroger's up a little bit today. Trailing stop's kind of hanging back. Who knows? There could be another leg higher in this, or it could be in the process of pulling back. The last pullback here was very shallow. You see that it, just barely went about halfway into that long range bar, and so trailing stop here is kind of in a similar spot as this one was, and it did not get tagged. It came close, but it didn't get tagged, and so that's why it's up there. So we'll see what happens. And then last but not least, it's been kind of few and far between for pending stocks, but I think that and that's kind of a function of like what we looked at before with this market pullback here. This last little pullback was literally like, sort of a 2-day phenomenon. Maybe not even 3, but 2 days, just simply because if we are using the closing prices, which the system, as like triggers in on a close above. So using the closing prices here, hey, you got a little bit of a dip, and then this day was actually higher than that close, even though it opened lower. And so, it looks like a 3-day dip, but using the closing prices, it was only a 2-day dip. So anyway, with the market like ricocheting right back up and just hanging around up here at the highs, there has not been a whole lot of new pending stocks, but we do have one. We have a new pending stock today. Twitter, right? And so look at this pattern here. This is actually a pretty nice pattern. Now, we had a trade in Twitter from back over here. You can see that trigger, and for whatever reason, I know what the reason is, but hopefully going forward, I won't have this issue. So I don't have all the trailing stops marked on here. I just basically have the last trade where the trigger and then where it finally tagged the trailing stop. So I decided to leave those on there. So basically, you can check the pending trades page, pending trades table, to get the exact entry, but it's pulling back a little bit here, which is fine. But Twitter, a close a little bit higher than yesterday's high, close up in this area here, will will trigger us in, and then the stop's probably going to be somewhere around the low of this pattern. But nice pullback pattern there, and so there's a lot of potential. There's a really defined place for a stop somewhere in this area of these lows here. But anyway, we need a confirmation. Just because this is a good setup, a lot of times you get a sell down, and then you get one bounce, and then you get a resumption of the pullback. And then sometimes, it's the second, like back over here, it was like one pullback and then it took off. Over here, you got a steep pullback and a bounce, and then a second pullback and a bounce. And then, of course, this was earnings. But anyway, so fairly decent setup here on Twitter if it decides that, perhaps it will consolidate here in this area for a bit of time and then turn back up. But pretty decent risk reward here. So that's one setup. There's a couple other that I've seen that look like they're sort of pre-pending. So keep your eye on the pending trades table for anything else, and we'll see if maybe Twitter triggers in. So basically, dog days of summer. Let's see, next week when I come back here and do this live show, it'll be September 1st, and then that following Monday will be Labor Day weekend, if I'm not mistaken. I have to look at my calendar here. And and then that's right. And then the following Monday will be Labor Day, and then things should start to pick up a little bit after that. In the meantime, it won't surprise me to see a couple more stocks hit the pending list. It's just it's kind of a slow time of year, and with the market up here in sort of nosebleed territory. Quite honestly, I'm glad that we don't have this huge list of pending stocks. It's all gonna trigger in right before we get some sort of a inevitable correction. Now, this market could easily push higher before we do get any sort of a correction, so you never know. So basically, it's all about just maintaining a good risk reward. And I got to tell you, it seems to me that the sentiment, and everything revolves around the Fed. So if the Fed, there's a lot of people out there that think, when the Fed starts to taper, then this market's going to correct, and they may very well be right. So a lot of what happens going forward is going to be based on the perception of the Fed tapering, and so we're just going to have to see. What they say and how the market reacts. And as I've been saying for a while, as long as this trend line is intact, everything's good. Obviously, it's a stock by stock basis, so it's a market of stocks, as they say. But anyway, so basically covered open trades, the pending trade. And that's going to be it for today. I will see you guys here next week. Thanks for tuning in.